All right, let's get started. I won't be accepting any more members so that it doesn't distract me. So the first thing that we will be covering is my approach. Now, uh, a lot of you folks wanted to know, how do I approach trading? What's my thought process? What's my mindset? How I achieved consistency, trials and errors. What is it that I look at the chart first? How do I manage my bias? So to give you a quick brief, I started trading about 10 years ago, and that is when I had found my mentor. And when I started, my mentor just said one thing to me, that your goal with trading is to collect 7 to 10 points every single session. It doesn't matter whether the market moves 100 points, 200 points, whether your conviction was right, whether your zone had all the merit in the world. Your goal is to learn to take those 7 to 10 points every single session. And just with that ideology, I started trading. Initially, like everyone else, I had my fair share of struggles, back and forth. But eventually, I got to a point where just collecting those 7, 10 points became second nature. I could wake up in the morning and I knew where exactly I'm going to take those 7 to 10 points. I often see a lot of traders, they try to overachieve or they try to outdo themselves. Now, please understand, with any profession in this world, whether you're a sports player, whether you work in an organization, it's all the same. It all starts with training, repeating the same process each time, and eventually you get to a point of where you call yourself an expert. So my approach is very simple and it stands till date, is whenever I execute a trade, first, I know exactly why that trade is being taken, because like you have seen, whether it be the daily plans or the weekly plans, everything is covered in detail. I even share why those levels have been picked. So what happens is when the time comes, I'm already ready. I know exactly where I need to engage. Now, that is the exact point when I do not think twice. The reason is very simple. I did all the hard work I had to do to identify what's important within, let's say, 100-point ES range. Once I've identified those one or two zones, then I am engaging unless there is a clear criteria there, condition there, unless the then developing context tells me not to. And the only reason that will be are events which are something unpredictable. So leaving aside events, you will realize that each time I am executing the zones or the plans that I share. Let's look at an example yesterday, ES. Are you able to see my screen?
Yes.
All right,
Yes, we
thanks.
can.
Okay. So if you will see again how we just had this minor resistance set on Friday. Now, a lot of traders will be like, how do we know we need to get to this trade? How do we know how to execute, whether this zone will work or not? But just ask yourself, from the gray zone up until the red zone, you had only one zone, which is resistance. And the only zone which was untested. In how long? Let's look at the period. The last time we were at this zone was 30th October. So, and why is that information important? Because thereafter, we dumped more than 300 points. And now we come back literally 45 days later, back to the same zone, which validated the sell which began from the top here. We know that this zone will work. There's no question to be asked there. And all I do is I set my orders. Now, that is my thought process. It's very clear. I've handpicked this zone and I am going to execute. If I'm not confident, I will reduce my size. But at no point will I ignore my planning, because that planning has been done after thinking through every possible scenario. So it's our job as traders to back the plan that has been put forth. And that is exactly what I do. I do not question my plan. I do not think if, but nothing. Once the zone has failed for whatever reason, I've lost those 7, 10 points, whatever that stop loss may be. It's only after that I reflect on why I shouldn't have taken the zone. If I start predicting what the zone will do at the time of trigger, all I have done is put increasing number of question marks in my mind, which ultimately hampers my execution. Does this make sense?
Yes, it does.
Yes, I'm not looking at the chat in case anyone is replying there. Okay, I'm just keeping it clean. So that's how everyone, all of us traders should think. It's not the time when a zone triggers to ask yourself questions. The only question is there an event? One, two, are we one time framing up, down? Just that basic criteria, which I will be covering in the next few slides. As long as you've covered that basic criteria, there's absolutely no reason for you to question the trade zones. Now, when I trade with the mindset of an entrepreneur. Very simple, of a sports player, if you may. It's very simple. I start my account. Let's say all of you guys, whether you have those funded accounts or you have your own trading account, you've put in money. Let's say you've put in $3,000. If you can afford 10, then put in 10. You don't need to trade the size of $10,000. But when you are trading, you want to trade with cash in hand, because what happens psychologically when I start my trading here, I put in certain amount of capital, and that capital is something which will let me trade comfortably for the next 6 months, even if I was to have a 50% win rate. That's the sort of capital I go with. And I'm fully aware that I hold that emotional control of not losing my way. So when you are trading, you want to trade with money in hand. There's no point you go with $1,000 or $2,000, you lose, let's say, $200, and there you are already thinking if trading is something that works for you. Then you're not trading, you're essentially trying to gamble your way through, because by deploying $1,000 or $2,000 or $3,000, all you're telling yourself is, you know what, I know I'm going to lose this, so let me just define that capital to 3,000. No, go in with 10. Be cash rich. That's how businesses operate, right? They are cash rich. Think like a businessman, like an entrepreneur. Be cash rich. Go into trading knowing that every trade I'm going to lose 100. Now, how does it matter if your account has $10,000? But when there's money in your account, you will always have that psychological confidence to continue trading. So have a mindset which is very clear. I'm here to make money. When I am to establish my own venture, I'm going to put something at risk. Fortunately, with trading, we can do that with literally 10% of the amount. So go in with that 10%. Have the confidence to keep whatever number suits you, but don't trade, how I say, for a lack of better word, but don't trade like a poor man. Trade like a rich man. Trade like you have the cash flow. And that is when you will realize that those losses, if controlled in the right manner, as long as you're following the trade framework that I keep reinforcing, then you will realize that those losses are very small to the capital you have. At the same time, psychologically, you're holding it together. And with that, you start executing with confidence because you know there's capital behind you. So mindset is very, very important. That is how I trade. That is how I think. I also think, like I said, you may think like a sports player or as you know, any sports out there, there's no 100% win rate. Like everyone, once in a while, we all will lose. The idea is very simple: to maintain a 70% win rate. As long as you can do that, you are trading right. That 30% will happen. The good bit is that with the zones that we have every day, every session, daily plans or weekly plans, those are more like 80%. The percentage of success reduces by 10% because of those opening trades, as they require a little bit of switching directions before we really get them right. So mindset, very, very important. Think like an entrepreneur, think like a sports player. Losses are part of the game. It is how you come back. We are here for the long run. The idea is to win the World Cup 4 years later. The idea is never to win that game that day. If you win that day, great. But if you have that long horizon of the next 4 years, the next 3 years, by default, you are putting less pressure on your trading. When I trade, I am not thinking how much money I will make today. Trust me, it's the least of my concerns. But what I am instead thinking every single day is, am I making any mistakes? What can I do better? Where can I refine? How can I refine my skill set every single session? It's simple. You go, you trade, you're done. Go back to the practice pitch, right? That's what players do. They go back, they practice, they train hard, they come back, next game, next game. And all you know, 4 years down the road, you've got the best player of the year, the best team of the year, and you've got someone winning the cup. So have that mindset. Think rich, behave like one, think like a player, play like a player, and you will see that difference in your trading. Now, remember, anything I'm saying is not for you to go reckless, but it is just to tell you, if you do it in the right manner, there's no reason why you cannot achieve consistency, why you cannot achieve success. I see a lot of traders, they want to jump in right in the middle of nowhere. There is no trade, there is no trade. You wait for your play. Why is it that because you see price moving as rapidly as it does, it forces you to engage? Why is it not? If you have to wait the entire day or the entire week, just wait for that zone to trigger. It has the odds in your favor 8 out of 10 times, 7 out of 10 times. There's absolutely no reason for you to be like, you know what, there was an IB breakout. Without having enough experience, I was chasing it. Stick with the plan. Control your emotions. Put all your emotions, all your energy, all your alertness into where you must engage, not where you would like to engage. There's a big difference where you must engage and where you'd like to engage. So I really hope that this gives you a perspective of how I think. Trust me, by end of the year, when you look back at your trading results, they will show a massive, massive improvement. And this is end of the year. You will see me talking end of the year, months down the road. I will never talk about when you look at your trading results 3 days down the road. Not going to happen. So you are in this you are in this for the long haul. You have to make sure you are behaving like one, you are trading like one, and your results will be reflective of just that. Are we good?
Yes.
All right, perfect. If you guys have any questions, you can just let me know. Otherwise, I'll keep continuing. Now,
Yes.
I have made a lot of mistakes in the past, trials and errors. I don't recall exactly who asked me, but someone did that. What sort of mistakes I made and how have I overcome those mistakes? The mistakes are very simple, where like all of us, we all are humans, okay? Trust me, we all are humans. We all have bias. There's no way I can tell you I don't have a bias. When I prepare the weekly plan, it really takes me 30 minutes to ensure that I have not translated my bias into the plan. So the reason is very simple. We always believe we may know where the market is going to go next, but it is very important, critical to remind ourselves that that's exactly what we don't know where markets will go. We can always have an inclination, a projection, a validation and invalidation to our ideas, but neither of us can ever be so certain that something is going to happen. And so it is important that when you are trading, you just need to remind yourself, that you have a bias and that bias has a stop loss. That bias has something that invalidates it, and that bias can be shifted. You have no money to be made by being rigid. Even if you are right and the market temporarily goes the other way for the next 50 points before doing what you anticipated, there's no reason for you to be wrong for 50 points. You can be wrong for 10 points out of those 50, but you cannot be wrong for 50 out of 50. Now, very simple. If you look back at the FOMC, and it's a very good example actually, before the FOMC, I had the inclination that we may see a leg down first. But upon release, it was very clear that they held the weekly pivot, and that is the only time I was like, done, forget the down, we are going higher first. And as we moved higher, we were long. You could have added long, not added long, your discretion, whether you trade the event or not. But ultimately, you will realize it hit the resistance, it hit our zone before reversing all the way into the following Asia session. So what it tells you, even if I was right that we were to go down, but it didn't matter because I was first wrong for 50 points. But what I did, I didn't let that wrong impact my trading account. I still remained long in favor until and unless we met the resistance or the then gray zone at 6900s. And that is it. That zone gave me the entry I wanted, an advantageous entry, and I let it ride all the way down to 6820s, which is the blue zone. So it's very, very important that as you are trading, you are keeping your bias in check and always reminding yourself of the ongoing structure, the context. And once things are in your favor or in align with your bias, you can obviously size up a little bit more to extract a bit more juice. So these are few mistakes that we all make. Bias is one of them. Sometimes we tend to trade a single zone one too many times. I have been a victim of that. And trust me, even today, once in a while, maybe in a quarter or in 6 months, I will be at a point where I am trading a zone one too many times. Now, this is the second most mistake that we all make is the zone is good, but it keeps chopping you out. And neither is it giving that response you are looking for. In that process, we tend to lose ourselves. Again, what we want to do when this happens, very simple, take a step back. Take a step back, reassess what is happening. Am I doing this right? Am I doing this wrong? What are the clues available to me? So when you go through each of these steps, and something I'll still be talking about in the next few slides, you will realize that your common mistakes, whether be bias or whether engaging at the zone while it's not responding one too many times. I'm not saying not to engage at the zones. You will engage as it is, but sometimes some zones are sticky in nature. And the stickiness itself tells us how important they are. But until we don't have a response, we don't have a response. So 1-2 attempts, fair and square, but thereafter reassessment is required. Third, and the most common mistake we all make, and recently I wrote on Discord, is holding the trade for your final target. Now, of course, if you are a scalper, 5, 7, 10 points, it doesn't matter. This doesn't apply to you as much. But if you are looking to swing scalp, which is to at least take the trade down to 20 or 30 points, maybe even 50 points, now that is when we all make the mistake of holding the trade until the final target is met. You don't want to do that. You want to constantly review the risk reward of your profitable trade as well, which means what I mean by that is if you are already in a profit of 20 points and your target is just another 10 points away, it makes absolutely no sense for you to continue holding a full-sized position for the last 10 points. The risk reward of your profit has diminished significantly by that point. Because if there's any sort of reversal, the first thing that goes are your 20 points that you had earned. Remember, the market owes you nothing. It is not supposed to give you anything. It's your job to take it. And once you take it, it is also your job to keep it. I can tell you, if I give an account to any random person, just by having that beginner's luck, trader's luck, they will achieve profitability. I don't know how, but they will. You know where they all lose money? Because they're unable to keep that profit. And that is what defines a trader. Can you keep your profit? Because if you can keep your profit, then you are already consistent and a profitable trader. So those are the common trials and errors I've gone through and I continue to, but obviously far less than it used to be when I was pretty much new at trading. Now, I was asked, what is the first thing I look at the chart? And okay, someone just tell me, give me a random ticker of your choice, and let's see, I'll show you what I look at the chart first.
NVIDIA.
All right, okay. All right, a blank chart. And the first thing I go is on 4 hours. And what am I watching for? I'm watching for where was the balance first. And where do you see? Right, obvious, this was the balance. Are you guys with me on this?
Yes.
Okay, now this is how I have trained my eyes that you tell me any random ticker and I can go to that chart. First thing I go on a 4 hour and all I'm watching is where was or is the balance. That's the most important thing, the most fundamental thing. That's the foundation to everything and anything I do thereafter. So once I have the balance, so I know what is a breakout. I know this was the breakout point. So now I start marking, okay, this was the breakout. And what I'm going to do next, I'm going to look at the catalyst for the breakout. Now, this is a stock, but even if it was ES, NQ, DAX, whatever you trade, but the moment is, okay, it broke out. Why? What happened? What triggered? And there will always be a catalyst for these things. Could be earnings, could be I don't know, any other event that could impact NVIDIA. And there you go. We know there was a breakout. And next, what I'm looking at is after how long did the breakout occur? So if you will see here, from about late May, let's call it just, let's say June for the sake of this conversation. So from June up until a year, basically, literally 12 months later, there was a breakout. So I know that there was a massive consolidation that occurred in a year. And when a massive consolidation occurs throughout the year, what am I first thinking is, okay, if this was a 54-point range, I'm going to look at 54 points to the upside, right? Because the longer we consolidate as per balance rules, the more aggressive is the breakout going to be or the breakdown. So let's just call it the more aggressive the break is going to be. And there you go at 100%. All I'm going to draw is a line. This is the 100% extension. And you can see how that ultimately was pretty much the top in NVIDIA. Make sense?
Yeah.
Okay, now I can always add volume profile to this. I can add other, I don't know, VWAPs, whatever you guys use, but I could add 10 other things to this. It doesn't change the fact that this is the very foundation to you starting. And once you start from this foundation, then it's all about finding confluences at certain levels. And then you start with, let's say for here, for example, again, we got into a small consolidative range. Then I'm going to take from there. So it's very simple. So this is interim analysis. This is more longer term when we look at the 4 hour. But if you look at this one, this is more interim. And what we will realize is that this was a 19-point range, and you extend another 19 points. And look what happens. This interim range right here, I'm just going to contract this interim range right here found its 100% extension, and so did the 1 year long range found its 100% extension, all at 204 approximately. What does that tell you? That gives you a confluence of a shorter time frame with the longer time frame, which means two things. Definitely, I'm not looking to go long here. Whether you short an index or not is secondary. Primary thing is to eliminate. First, always, whenever you guys are trading, I always operate with the process of elimination. First, eliminate. Often what people do, they look to add first. No, eliminate what needs to be eliminated. And the first thing we eliminate here is I'm not going long. Done. Now, second, does the short hold merit is the next question I will ask, and why, and so on, so forth. So again, as you can see, we've now come back inside this small mini balance again on a shorter time frame. And if there's continuation, as long as 184 holds, a rotation down to 165 is pretty much inevitable. Now you take this chart and you merge it with what NQ is doing, with what ES is doing. Trust me, you will have more answers than questions. But does this make sense how to go about it? How I actually look at the chart? First thing, blank chart. No indicators, nothing. Just draw that balance that you see on 4 hours. And if 4 hour is not clear, you can go as much as a day or 1 hour, 30 minutes, depends. But 4 hour is your thumb rule of sorts, at least with index. Are we good? All right. Okay. So I've spoken about all the points I intended to cover in the first slide. Any questions before I move on to the next slide?
You hear me?
Yes, I can now.
Do you do balance zones? So I noticed that you do balance zones on smaller time frames too, correct?
Yes, correct.
Like how far down will you go? Like 5 minutes, 10 minutes?
No. 30. 30 is the lowest.
30 is the lowest. Okay.
Yeah.
All right. Thank you.
All right. I'll assume no more questions. I'm moving on to the next slide. Okay. Trade strategy and framework. This is the most important part of your trading. Now, pick your style first. Do you want to swing? Do you want to scalp? Do you want to swing scalp? Now, the difference is very clear. Swing means ideally you're doing something like what I do pretty much every other week, which is aim for the next 50 or 100 point trades in ES. The second is scalp, where you're looking for your standard 7 to 15 points every single session. Or you're going for a swing scalp, where you are like, you know what, I'm going to take my bread and butter first, which is the first 10 points. And then if it allows, I let the trade run for the next 25, 30 points, which usually is where I set my primary targets for a potential swing trade. So define your style. What I've seen is, and this is in our room, by the way, it's not outside our room. A lot of folks will message me and they'll be like, RS, I was in this trade and I made 15 points. It looked so nice. I wanted to hold, but I got out of it because I was nervous and the trade went on for 50. Wait, but were you in this trade for a 50 to begin with? Because that's the most important factor that allows you to psychologically hold a trade. If you're a swing trader, you need to understand your pain point is different. Your ability to digest volatility is different. Like you've seen the multiple swing trades I've shared with you guys on Discord. You would have realized how I have held trades. Means I'm still holding a runner from 65.50s. I'm still holding that runner. No matter the back and forth, no matter what is happening, I still continue to hold. So as prudence would suggest, I am trimming along the way. But am I keeping that last runner? Yes. Ask me the question, why? Anyone? So the reason I'm holding this trade is very simple. We still have got that untested after hours high at 69.54. That is my ultimate magnet, and I'm holding for it. And now it doesn't matter if I'm not holding 100% of my position size, I'm instead holding 20%, maybe 15%. It doesn't matter. The whole point is I continue to test myself psychologically in terms of patience until we get to that point. And through that period, I am trading as it is, which is taking those daily zones or those scalps or the interim weekly zones we have. I'm taking all of those. It doesn't impact my core idea or thesis that we cannot have 69.54 untested for long. Now, can I be wrong? Sure. What are the odds? Limited. Why? Because in the past, historically, we've not seen untested highs remain in for a very long time ahead of any major pullback or correction. So when we know that something's likely to happen, the odds are in your favor, then when you get the opportunity at 65.50s, I'm just holding it, trimming it along the way. So I am getting paid, but at the same time, I continue to back my vision irrespective of the pullbacks we see along the way. So as a swing trader, the mindset is very different. The approach is different. The ability for you to stomach the moves are different. When it comes to a scalper, it's very simple. If you are in for scalping, take your 710. Don't aim for those 50. Don't regret the 50. Don't think about, oh, RS just banked 50. He just wrote 30 points. Why? Because that is what I can do. But maybe you are not positioned for that. Maybe you're not ready for that. Maybe you've not got to the stage of that. Or maybe you don't need those 30, 50 points. Maybe you're happy with the 7, 10 points. So define what is it that you aim for. Pick your style and stay firm with it, because once your style is defined, then every trade opportunity is also defined. Next, position size. I need someone to interact with me here. I want to just pick an example. So someone, please, who's ready to participate?
Yeah, I will.
Okay. Tell me, what is your goal with trading? How many points?
I'm on the very lower end, and I always go for a sort of 7 to 8 on ES.
Okay. And give me a dollar amount or pounds, since you're in.
It will only be, because I trade top step, it will be $5 per mini.
Oh, no. How much would you like to make in profits from trading?
How much? I don't really have a profit goal. Just consistency.
Okay, put a number for me. So just, so that we have something of
100
substance
a
for
day.
everyone. 100 a day. Okay, so let's say we've got 360 days a year.
Yeah.
Okay. And out of which we have bank holidays, we have me not trading on Fridays, and we have probably holidays along the way where we go take a summer break or something. So essentially we are trading about 200, 240 days a year.
Yeah.
Fair enough?
Yeah.
So now let's say you want 100 a day, which boils down to how much into 200 days, and we are talking 20,000, right?
Yeah.
It's very good. Most of you, I would imagine, are trading, are literally trading it as a second profession, not as your primary income source, correct?
Yeah.
So 20,000 side income, superb. You don't have to take any sort of headache, nothing. It's just going to be in your bank. So 20,000, just think about it. 240 sessions to make just 20,000 pounds or dollars is easy. And why I say easy, because all you need for that is 10 points a day,
Yeah.
right?
Yeah.
2 contracts. That is if you are in the US, that's 2 contracts, micros, right? And you have got the 100 you want. Now, the question to everyone is 10 points difficult in with the plans that I share?
Yeah.
Yeah, that it's difficult.
Yeah.
Guys, is it difficult to capture 10 points?
No.
If you were to only follow the zones, do you not think
Oh,
that 10 points would be in your bank every single session? Because there are certain days where we have even 2 zones triggering, and that is net of losses. If that is possible and that can happen, define your position size. You don't need to be aggressive. I see a lot of traders, your appetite, your mental appetite, thank you, Philip. Your mental appetite is probably, I'd imagine, $200, let's say. But the way you want to trade and achieve your goals is more like, I want to do 500. Guys, get a balance here. This is the most important thing. Match your expectations with reality. I'll tell you something, and these are just law of numbers. If you are a consistent trader making $100 a day, and I'm serious about this, if you can do $100 a day, I can write this on paper and tell you that by second year, you are going to double the money you made in the first year. And I'm telling you this out of experience because I have lived that. I lived what you guys go through right now, and I have lived to do what I have achieved today. So one thing is very clear to me. If you can align reality with expectations, go for as little as $100 a day. I know it sounds stupid small, but just bear with me and go with me and just do as I say. 6 months even of going for $100 a day, you will realize that you've probably added 30-40% profit to the capital you deployed. And any business out there, any venture that you take on will give you lesser returns than this 30-40%. And remember, trading takes fraction of your time. Trading takes more time in analysis and studies than it takes in actually making money. So when you have me, who's done the bulk of analysis for you, who's put forth a plan for you, who's providing you the insights that you need, who's sharing live commentary, then your effort is down to 10%. Then that 10% is what you need to master. So make sure that when you get off this call, your first goal is not to hit the button and trade, but rather define your style, define your mindset, define your position size, align expectations with reality, and then you guys will literally witness it yourself in weeks and months to come that how your trading performance changed for better. Anyone here who realizes that so far their expectations and reality of how they are psychologically built differed all this while? Anyone?
Yeah, I think I expected to make a lot more than I was actually going to.
It happens, happens with all of us. So good,
Yeah,
glad. So just make sure that starting next week, and anyways, we are towards the end of this year, but starting next week, make sure you're aligning your expectations with reality. Go for the smallest amount. Let your mind, let your inner self, let your emotions, let your skin get used to $100 of movement. Let it digest $100 of loss. Let it digest $100 of profit. Only when your system starts accepting that, you start achieving consistent profitability, is when that 100, trust me, will look like 150, 200, 250, 3, and all the way into thousands. And I can also tell you this with experience. If you were to follow what I've just walked you through, you will realize that the 2 or 3 years you're going to waste in by blowing up your account and restarting trading each time, you will see that just by avoiding all that emotional stress and digging a hole for yourself, just by following what I just suggested, which is to go for the 100, aligning your expectations and reality, you will realize that, oh my God, the 2 years that I wasted turned into 2 years that I invested in myself. And that investment is the fruit that you will get of consistent profitability. Are we clear here?
Yes.
Can I
Yeah.
expect 58? I'm the 58th one, so let's say 57 of you will do this. Because if you do this, then come back to me if it doesn't work for you.
Yeah.
So you've got that position size, how to think, and now stop loss. Pretty standard, guys. Please. Again, it's 57 of you here. I don't think most of you are reckless, but I've had few guys who will tell me, you know what, I kept a 20-point stop loss in ES and I have no idea why. If my framework says 7 to 10, guys, I've thought through this. 7 to 10 it is. Whether it's volatile, not volatile, doesn't matter. Stop loss is a stop loss. If you get stopped out, the market turns, good luck. But your job for that day was stop loss is to be respected, and you did just that. After that, sometimes it may happen. A zone slices through for due to some reason or the other. You lost your 7-10 points, come back in when the zone finds acceptance again. And you have me giving you live commentary, telling you guys, zone slice through, avoid the zone, wait, tempo is high, one-time framing, so on and so forth. I remember it was very recently, I think it was an ES and NQ zone. Yes, it was both. I commented on Discord, guys, tempo is high. We got to wait for list framework or something before engaging. And guess what? That zone failed. And we never had a list confirmation either. Now, see, this is where I step in. If I'm available, I'm around, I am going to update you guys on what needs to be done or how you need to approach tempo. So please always respect your stop loss. 7 to 10 in ES. In NQ, it gets a little funny, but I would say, please don't try to exceed more than 30, 35 points at best. Now, why I say 30, 35 points? Because folks who trade NQ have realized that with the new revised approach that I have with NQ, the zones are producing 100 plus points, not really 10, 20 points. So is the reason why I'm willing to give it some room. Now, when you want to give room to an index like NQ, it may not be easy. What I suggest is lower down your size. Again, size is your weapon. Size is your edge. Size is your strategic weapon. So anything and everything boils down to size. Reduce your size, get comfortable, get around with NQ's volatility, and you will realize that, oh, if I had 3 good trades around NQ, I have made an equivalent amount of dollars as I would with a higher size and a tighter stop loss. And what does a tighter stop loss do? It stops you out, but it doesn't invalidate the setup. So you need to understand that stop loss, and this is a very important point, that stop loss is supposed to invalidate the setup. Okay, the trade setup. It is not supposed to invalidate your appetite of being in the trade. Is this bit clear?
Yes.
Yes.
It is.
Okay, please
Yeah.
make sure the trade setup has to be invalidated, not your ability to hold the trade. And that is a mistake which a lot of traders make. They are like, you know what? I had a risk of $100 and that $100 hit. But wait a minute. The trade worked. The setup worked. Why did you take that loss? Because your appetite was 100. No, your appetite is the invalidation. And to adhere to that invalidation, if you need to adjust your size, then please do so, because ultimately you're in this business to make money, not to take a stop loss based on your so-called definition of risk. Okay, and then we've got targets. I've already spoken about it. I've already covered the impact of volatility on the trade framework. I do not change my stop loss no matter what, unless I am looking for a multi-month swing, which was at 65.50s. That is when, instead of giving it a 10-point room, I'll give it a 20-point room. But that is all I'm giving it. So you will realize I only swing ES for most part because I can manage that better. Of course, I do have my hands around NQ once in a while, but predominantly ES. And again, if you want to swing that, I look at the loss. I'm willing to take 20 points. What is the profit I'm looking for? 100 points. It is still 1:5. So RR is never my problem. My problem is I want to be in that setup because I know that zone is important, that area is important. And sometimes to tackle such wide stop losses, I build my position. I don't take the entire 100% at 65.50s. I'll add at 65.50. I'll add at 65.30. I'll hold it and get a better average that allows me not only to build, but to manage my stop loss. Okay, so are we clear here with trade strategy and framework? Any questions?
Well, good.
All right, Steve, guys, just a quick reminder, please, any questions, unmute and ask me because I'm not reading the chat. I just happen to do now. Do you have recommendation for what our max loss daily should be, assuming our daily goal is 7 points a day? 3 MES. Steve, I'll circle back to you on personalized recommendation. Just hit me on Discord DM and I'll get back to you. All right, next, mindset and skills. Define your trading goals. We've covered that part. Now, the most important part here is situational awareness. A lot of traders step into trading. Again, this brings me back to the expectation versus reality. You want to trade and achieve results as a full-time trader, but all you do is either hustle or you are a part-time trader. Please understand there's going to be a huge difference in results, in the opportunities you can capture. Now, when you realize that difference and when you accept that reality, then you will know that not every trade is what you will be able to catch. There will be times you're going to miss trades. And if you're going to miss trades, there's no need to get emotional about it. And that's my fourth point here. Emotional management, fact reminders. Remind yourself of facts. I'm not a full-time trader. Then why am I expecting to catch every zone or every move that is being shared on Discord? That's not going to happen. Why? Because you're not full-time. You're not sitting from 9:30 a.m. Eastern time all the way to 4:30. You're not doing that. So when you're not doing that, don't expect results to match that. Now, instead, you know you are part-time or you're hustling, which means in a week, instead of 10 trades that what RS was able to take or other traders in the room were able to execute, I will instead probably have 2 or 3, but that is fair. For the time you're able to invest, you getting 2 to 3 trade opportunities is phenomenal. So please Be aware of your situation. Be aware and align your expectations with reality. And that in itself will control a lot of your emotions when it comes to chasing. Now, why do we traders chase? It's very simple. Either we missed a move, we chased, or we are chasing performance because it's like, oh, Monday, Tuesday, Wednesday, done. I was busy at work. I couldn't take a trade. Now, Thursday, I'm sitting at home. I've taken my day off. My boss is on a holiday. I don't know what it is, but my wife's not at home. My cat is not at home, and I must trade and cover Monday to Wednesday. Guys, that does not happen. In fact, I work in the reverse format. I say if you did not achieve your goals between Monday to Thursday, forget it. You're done for the week. So please do not press, do not chase. Do not press, do not chase, manage your emotions, be realistic on what you can achieve. And if you're a full-time trader, again, if you want to catch the most important trades, then what is your daily process? Are you setting, like, honestly, how many of you guys are online now? 57, 55. Come on, I want everyone to tell me, and I literally mean everyone. How many of you genuinely, and be honest with me, set alerts? I'm not talking about setting trades, setting alerts at the weekly zones and the daily zones that I share. Please.
Yep.
Yep.
That's 2,
Yeah.
3,
Yep.
4,
Yup.
Yeah.
5, 6,
Yes.
7,
Yep.
8,
Yep.
Yep.
9.
No.
Only some.
No.
No, who is this though?
Yes.
Why no? Like, is it costing you money to set an alert? Come on.
Laziness.
No, I'm usually working, but I have the window open and I kind of have a plan of where I'm planning to engage, and I just set the trade off
All
that.
right. All right. Okay. Okay. So it's very simple, guys. And I don't need to go much further, but the last 2 weeks, honestly, if there were 10 triggers, I would imagine 1 or 2 would have failed at best. At best. 8 have worked. And you can go back. You want to test that zone, you want to test those plans, you can come back to me and tell me if the results are any different. So it's very, very important. Your prep is, sorry.
No, yeah, RS, can I ask a quick question, please?
Sure, sure.
When we're talking about the zones and first test, do you consider first test and extended trading hours for US, or is the first test only during the regular trading hours?
For me, I even include outside, but it's very conditional. Outside has to be predominantly during either London or it has to be event driven.
Got it. Thank you.
Okay. So like yesterday, I think we had an event driven move, which was Broadcom earnings after close. And that resulted in a quick spike into ES resistance. So that's first test done. Now, remember, and this is a nuance, which I will cover later, but again, since you brought it up, remember, now that same zone, by the way, remains of interest to us, okay? So I'm not eliminating the zone anymore, but now I'm adding a nuance to it. That same zone is important to it, but now remember, on first touch of that zone, you cannot short it anymore. Why? Because let RTH session clean up the highs printed in the after hours market. So if my zone is from 6927 to 6934 or 32, I don't recall exactly what it is. But if the high printed was 28 or 29, then you cannot take a short at 27 because you must already be aware, A, the zone tested, B, let RTH clean up first. And then C, how is RTH cleaning up? Is it cleaning up while grinding up, or is it cleaning by one time framing up into the zone? That tells you whether you want to retake the zone or not. If it is grinding up, it's a standard way of getting into a zone, it's okay. But if it is one time framing up, you want to just wait because you've got 69.54 untested high sitting right above. And when markets are trending, you know it will not only get to the most immediate magnet, but it will go to the one which is further out there. So just keep this in mind because these are specifically event-driven tests of the zones or during London. And even if it's London, it's the same story, right? Let the London low or high clean up if it is at the zone, and then look to engage. Let the cleanup happen because and that cleanup doesn't mean if the high is 28, it will get to 29 and that's clean. Wait, there will be a rejection, there will be an excess, there will be some form of look above and fail. There will be something that will happen for it to then reverse. So very specific as to when and how to look at these engagements. Otherwise, it's pretty much standard. Good here?
Yes, thank you.
Okay. Now, how to mark a comeback after a losing streak? You know, guys, I'm going to give you the simplest of solutions. You have 3 losing trades. And when I say 3, it cannot be at the same zone unless the zone invalidated. If the zone invalidated, you have 1 losing trade, right? So if you have 3 losing trades at 3 different distinct zones, please reach out to me and I will tell you exactly how to make that comeback. But if you decide to independently go on a losing streak after those 3 trades and then come back to me a week later, trust me, I cannot help you. So let's put a limit. You decide, you know what? I'm going to reach out to RS after 2 trade ideas that fail, not 2 trades at the same location. So when 2 ideas fail, I'm going to reach out, I'm going to share the trade, the thesis, and I will let him guide me because that's why I am part of this Discord. Can we all agree to this?
Yes.
Okay, so
Yeah.
make it a thumb rule. All of you guys, and you know, this is very good. Slayer, I think it was a week back, 10 days back, I don't recall exactly, but he reached out to me and it was one of those tough sessions on a Tuesday, if I'm recalling this correctly. But it was one of those sessions where bias was a problem, where levels were, you know, like it's there, but you're unable to go through it. And then we just had a conversation. Trust me, it was nothing to do about his trades, where he could have improvised. No, it was more about how to decipher what happened, what it means, what is the market trying to tell us. So we had a very different but a very important conversation. And what happened after that? The next, I think, week, Slayer, please go ahead and tell us what happened.
Yeah, the next week I implemented everything we discussed. The issue is kind of just the stickiness of like the weekly pivot we have down at 47.52. It was in that just that week or so we were sitting between balance ranges, and in your weekly plan you laid out that we kind of expect some indecision and before FOMC not a lot to transpire. So the overall one of the main takeaways for me was to just zoom out, be primarily watching more 30-minute or 15-minute time frames instead of watching 5 minutes, which on a 5-minute time frame it looks like we're just bouncing around inside the pivot. But zooming out, it made it a much clearer picture. So after I started doing that, everything got a lot clearer until we got volatility to return there. And the issues I was having that day did not return whatsoever.
Perfect. Thank you. So guys, it's very simple. I'm not trying to take any credit for his success. Trust me, it's his hard work. It's not mine. All I'm saying is when you reach out to me, I can push you in the right direction. I can bring in the clarity that you are possibly missing. I can stabilize those emotions that are running high. Now, that is what I do and I can do. And when I do that, historically, I have seen members having good results thereafter. It's not just one slayer, it is many others who keep reaching out to me, and ultimately, all those conversations have had positive impact, even if not the same session, but the next subsequent sessions have meant profits. So it is on to you whether you reach out to me. I can only encourage, I can only remind, I can only dedicate myself, my time, when you walk that step forward. If you decide to stay quiet, you decide not to share your journals with me, trust me, that's your decision. I keep reminding everyone, share your journals. And journaling is the most important skill set. Trust me, you say journaling, it's not the process, it's a skill set. Because trust me, 99% are lazy to journal. Sorry, 99% are lazy to journal. And that includes me, by the way. I used to be extremely lazy when my mentor asked me for my trade report. Why I took those trades. What was I thinking? XYZ. But when I started doing that, as much as I hated doing that, I realized, and I kept realizing, that I know so much more, yet I am doing exactly the opposite of what I know. I'm doing the opposite of what I've learned. I'm doing opposite of what I should be doing. And that is it. That is when the change happened. It's never about, guys, that we don't know. Please, I have taught you so much that even if you remember 20%, you are profitable. I can tell you that for sure. But the problem with us humans is there's so much information overload, and we are so in the moment that we forget what we've learned. And the only way we can remind ourselves is when we journal, because what we are then doing is we're literally writing down what I was thinking at the time of the trade, when it is so obvious that this was not a short but a long, or this was so obvious I should have entered the trade here and not missed it. And all that obvious starts coming up. And when that starts coming up, it's already resulting in a change of psychology, how you feel about yourself, your emotions, everything starts to transform for better. Because now you're realizing that, oh my God, I have got this power. Oh my God, I know this. Now I just need to use it. So each one of you, right? 50, now 54. 54. Some of you are consistent, so I'll just leave you out. But the remaining 40, 35, honestly, whether I take a day extra to reply to you, a day more, a day less to reply to you, you need to send your journals. I have a set format. You like a different format, up to you. I'm not holding you to a format, but get me those trades. I've got Sagar here. I don't know if he's still part of this call, but I've got him here, and he sends his journal every single day. Trust me, he doesn't miss. And I just don't know how that's possible, but he really doesn't miss. I've got Michael here, who began 2 years or 3 years ago, every single day journals. Now he's pretty good. He's sharing his trades live on Discord. So again, I know his thought process. He's trading at the zones that we talk about. He's applying the framework I talk about. So I already know how he is doing. So it's either you keep sharing what you're doing in the Discord room, because the whole idea is that not just you, but everyone along with you learns. And that is also an opportunity for me to always step in and say, wait a moment, you are thinking wrong. Wait a moment, this is not the what market is telling us. And That is the difference. That's the whole point. The more you engage with me, with the team, we all collectively learn, we all collectively ensure that we are on the right path. Okay, so I'll leave you guys to journaling. It's the most important thing out there to succeed. Michael, go ahead.
I only want to say that I can share a template for journaling in the training chat. And on top of that, I only share my trades on Discord because I hope you intervene when I do something wrong.
Yes, and we have, right? How many times we've seen you or anyone else tilting in the wrong direction, and all I need to do is a little bit of nudge and you're in the
Yes.
right direction. And that's what it is. It's like this, guys. You could be taking a right trade, and I'm not taking that away. Maybe you're taking a trade which is a good, decent short against, let's say, IB high. Okay, very good trade. You've got merit for it. You took a trade. You made your 30 points. Great. But somewhere in that 30, you need to realize the entire context and structure was about using that pullback of 30 points to go long. That pullback was never the 30 you wanted to take home. That pullback was the point to go long for the next 50 or 100. Whether you take that trade or not, or whether you capture the magnitude of that move or not, the point is, did you take the trade in the right direction? And if you start doing that, you will realize, and if you start doing that, you will realize that A, your trades are less stressful. B, you are able to learn, understand what the context and structure is saying. Like, I keep sharing those detailed charts with notes. I've just resumed that recently. I do that ES and NQ weekly, ES and DAX weekly review. Funny thing, what's the hit rate on those posts? 20%. And what's the hit rate on ES weekly plan? 70%. You know what that 20 tells me? 90%, 80% don't even want to bother reading what I shared. And that's where the flaw is. When you read what I wrote, it's not about me saying this zone worked. Trust me, I know zones work. I don't need to tell you that. What I'm telling you is why the zone worked. What I'm telling you is why you had to be in that trade. What other clues were present for us to be in the trade? Because at the time of sharing the zones, I don't have MGI with me. But when we are executing the trades, MGI is with me. And that is when I know that this zone has twice the merit that it had to begin with, or twice the strength it had to begin with, or twice the probability of winning that it had to begin with. Everything is confirmed. Everything is being done to give you the confidence of executing and managing trades. If you guys recall, it was very recently where we were constantly trading that London kept forming either a lower high or a higher low. So when we were trading down from 6,790s all the way to 6550s, I kept emphasizing on how the pattern was London forming a lower high. And that pattern itself allowed us to be in the right direction of that entire reversal. And when the move up began, it off that 6550s, you know where it began from? London printing higher lows. The low that we made in November, the low is actually a London low. RTH never went there. And look at that. How did it so happen at the zone I marked as important? So it's extremely important, guys, to read those reviews. I'm telling you, again, like journaling, the most boring thing is to read something that has already happened. In fact, you will be like, oh, it's done. I missed it because I was with my cat. Doesn't matter if you missed it, because you know what? There are another 200 days to go. And because we trade set number of patterns or characters, then you know they will repeat in some format again very soon. And when they do, you are then positioned for it. But again, for that, two things, journaling and weekly reviews are a must. Means, trust me, if you don't read my weekly plan 1 week, I'll give you a pass. But if you don't read my weekly review, makes me question the commitment you have towards consistency and profitability. So again, a reminder, please read those weekly reviews. It is for you that I'm doing, not for myself. Trust me, apart from investing 2 hours, I get nothing out of it. So do that. And starting next year, I've already announced this before, but starting next year, every week, now this is an initiative that I am taking, subject to participation from everyone. I'm going to host weekly tutorials. That is me walking you through every trade that was out there, walking you through the sessions, the common patterns we observe. And so that as you guys get into the new week, everything is fresh, you are ready, prepared for the week ahead. So there are things I am going to be initiating next year for your success, but it will all boil down to your participation. So any other questions before I move on to the next slide?
I was just gonna add a brief point that for those folks that are trading like evals and the funded prop accounts, you should absolutely be sending your trading journals to RS. Like if you're trying to pass accounts, if you're like having problems staying in those accounts, because every time you reset it, you're also trying to give you're like artificially giving your brain a mental reset so that you can try and forget what made you fail that account in the process. But you need to be journaling those trades and sharing them with RS so that you actually stop blowing those accounts. Otherwise, you keep just getting this blank slate and then, acting like everything's fine and trying to forget about everything that you were doing, that you're not going to actually progress and you're going to keep making the same mistakes.
Fair.
100% agreed. All right. So if no more questions and thoughts, I'll move on to the next slide.
Chris, got
Go
one
ahead.
quick.
Go ahead. Go ahead.
For journaling the trades, it's all clear. If I want to journal at the days, I mean, just to understand what happened, would you share maybe at some point the framework or the core
Right.
questions? Not many of them, but just maybe 3-5 questions. What did happen during the day, so we can look back and then to actually understand maybe there are some repeating patterns, etc.
Right.
Just something really
Right.
really
So
core.
anyways, from next week onwards, I'll be trading light myself. So what I would recommend is send me an email or Discord message so that I don't forget, and I will create a format for you and for everyone else, of course. So you guys can exchange with yourselves, discuss amongst yourselves, and come back to me for final thoughts, if at all. So yeah, that's possible, and that's a good initiative.
Oh, thanks.
All right, guys, next, zones. So I had a lot of questions on zones, actually, execution, etc. So I'm just going to quickly run you through this. Zones. These are areas of strong interest. I call them high probability trades. Trades where I personally set orders and forget. Okay, not full size. I put in a partial size order, but always set orders there. Why? Because these are zones that have tons of confluence. When you look at my zones and you're like thinking, why? Just ask yourself, if in a 50, 100 point range, he's just shared one resistance, just ask yourself, what would be present at that region for me to even pick that area as resistance? So you have to just digest this, that these zones are extremely important The idea behind sharing zones with you all is to make your trading simple. I understand that when you're trading live is difficult. I'm accepting that because unless you are not familiar with the context, you cannot trade live, which means where do you make your buck? That's the zones. And we've seen over the last 2 weeks that, forget 2 weeks, since the time I've returned recently, we've seen that zones trigger almost every day or every other day at best. And when that frequency of trigger is present, you already know that at least those are good locations for you to engage, whether you can trade gap rules or not, whether you can trade the open or not, whether you can join a balance breakout or not, whether you can join an event move or not. None of this matters. What matters is, can you take the zones? If you can take the zones, if you can take those weekly pivots I share with you, that is already you covered for the entire week. And is why my emphasis on the zones. I don't need to. The zones are such, like, think about it. I take off. I don't trade. I don't even need to tell you guys, take the zone. Why? It is out there. I've prepared you for it. I don't have to say anything more than I've already said in respect to these zones. So take these zones. And if you guys feel, you know what, yes, the zones are there. It is really good to have these zones, but somewhere I need to understand why this zone to have the confidence to execute. Okay, reach out to me. For example, this 69, 27, 32, 34 resistance was there since the last 2 weeks. So if you're reviewing my live chart, if you're going through everything in your free time over the weekend, hit me a message. RS, this is the resistance you've marked. Please explain to me as to why have you marked it as your resistance? Why is it not a pivot? Why is it a resistance? What makes it a resistance? Done. All you have to do is review the plan, come back to me, ask questions. I will explain to you, and there you go. You are ready for whenever that resistance or support triggers. So again, simple. We have to keep trading simple, and that is what zones do. Zones are high probability locations. You don't want to question them. The only time we think about not to take a zone trade is because of the context at the time. Maybe it was an event that led to the trigger of the zone. Maybe it was one-time framing higher due to some reason, or it's a breakout trade. That is when we avoid zones. And 90% of the time I do update, but the remainder of the time you have to keep that basic trade awareness as to these zones then not to be taken. Otherwise, when everything is just as always, it is basic standard, then you can take these zones without any sweat. Okay.
Can I ask a question on that?
Please, please.
So here's a good example. So Monday's ES chart, you have a zone, I don't know, like 68. It looks like an opening zone, 68.88 to 68.92. Now that zone, that was from Monday's chart. Now look at your live chart you have up there now, it's gone, but you have a line there, correct? That dotted line.
Right.
Okay, so I noticed that throughout the weeks, the charts will change, obviously opening pivots, that kind of thing.
Yes.
So are we, I try to keep, copy and paste your chart every day. So should we go back? Because I don't want to overwhelm myself by having to look at all the 5 different charts from the week, right? That's not what we want to do.
All you have to do is look at the daily chart that I update ahead of every single open. Your
Correct.
focus are those charts. The weekly chart, I'll be getting down to it in a bit, but the weekly chart is the blueprint for the week, and the daily is built off the weekly. So at no point you will find conflicting information between the weekly and daily. Okay. And the daily you need to update it every single day, because there will be points where, for example, the zone that you're talking about was already resistance on Monday and it worked, which means
Yes.
it's no longer resistance for me. And you can see that on Wednesday, how it was an irrelevant zone, right?
Yep.
Then again, you will see we had resistance marked here at 6900s, which worked on prior Friday, but I still kept that level as a list. List means we apply the list framework, and you can see how we had a textbook list short right here.
Understood.
Okay, so there will be points where I will keep updating where with what's relevant or what's used, the magnitude, so on and so forth. So keep ensuring that you are following those daily charts as I share them before
Thank
the
you.
open.
I appreciate it. Thank you.
Sure. All right, back. So again, how zones are defined. Very simple. I look at market volume profile. So profiling is one. I look at intermarket confluence, where I'm trying to align my zones with DAX and NQ. Zones are defined through measuring exhaustions across time frame. Zones are defined by having multiple range extensions aligning, and a little bit of the market memory that I look at. So these are my, let's say, core or go-to frameworks when I want to define a zone. And only when all of these find confluence is when I truly mark a zone and leave them as resistance or support. And similar reasons when I find weekly pivots or otherwise. So this is my general framework. Again, as you want to learn more, I'm an open book. I encourage you guys to ask me questions in the chat room, ask me questions in DM, and at my earliest, I will get back to you explaining why I defined a certain zone. Because sharing all the reasons every single day is impossible, as the focus is very different when the trading session is on. It's more about how the structure is evolving, the context, etc., the trades we are taking then. So it is difficult to share why a certain zone was picked. Rather, this is something you should take the initiative of reaching out to me and learn. Next, how to navigate the zones, guys, very simple, right? Trade framework. First test, take the hit. Simple. We first test touch, we should have a position in. If you are not confident, if you have any other questions around them, just ask me, I will answer. Or at best, you have the list framework which is present, and you can use those as well to confirm your entry. But remember, the list framework will take a minimum 60 minutes, before which the zone could have worked on first test, given 10-15 points, comes back, tests, completes the list framework to ultimately work. It works both ways, but given the zones are of such high confluence, I tend to call them first test is your first real opportunity. Thereafter, lists at the core support or resistance is always optional. For example, you can see how this blue zone was your support on Thursday. First test, you never got the list there. Similarly, this was your resistance. You never got your first test. Sorry, you never got your list. Again, first test, and it flushed lower. So we've seen time and again, support and resistance work very differently from pivots. And once I call something a list, by default, we start seeing list framework signaling a trade in those locations. Okay, when to avoid zones, situational awareness. The next slide actually talks about this in detail. And then the duality of the zones. Again, any zone that I share, remember this. If the zone slices through, there will be days when I may not be there. There may be days where it will slice through. Whenever the zone slice through, if it's a resistance, watch for it to become support on the back test. And if it is support that slices through, watch for it to become resistance on the backtest, because given the confluence at these zones, given how important these zones are to the entire structure of the market, right? The entire structure. These zones on failure will flip. And if you go back to all the zones that have failed in the past, and of course, if you spent a good time with me, you would have realized that each time zones have failed on first test and sliced through, any back test at that point became your opportunity to take another trade. So make sure you are aware of this. It doesn't happen very often, but it can happen. And when it does, you should be ready to switch directions once it has failed. Clear? Daily and weekly plans. Again, I'm going to repeat this. The weekly plans are a blueprint, guys. Blueprint. I do not deviate from what the weekly vision or what the weekly zones mean. If it's an upside pivot, it's an upside pivot. If it is downside, it's downside. And you will always observe that all the weekly zones in some manner do reflect on the daily plan. It is extremely rare that a zone may not appear in the daily plan. Does it mean that you don't need to know the weekly plan? You must know, because what is labeled probably as a pivot in the daily plan is labeled as upside pivot in the weekly. And what that upside, the word upside means to you is that we are now looking for an acceleration of a move higher, and vice versa, where it says downside pivot. The weekly pivot helps you target either the upside pivot or the downside pivot. So that is the role of every zone that is shared over there. Now, there will be points where the weekly zones will overlap with the daily zones. For example, I could have let's say a weekly pivot at 68.44 to 68.54. Okay, so that's a 10-point wide weekly pivot shared in the weekly plan. So what I've essentially told you, guys, this is a 10-point wide weekly pivot, but this is what it is. I cannot narrow it down for you on a Sunday. But I've already told you that this 10-point range is important. Now, come Monday, through whatever information I then look at how London session developed, so on and so forth, I then go ahead and narrow the weekly pivots for y'all. So instead of it being a 10-point wide range that is there in the weekly, I narrow it down to probably a 4 or a 5-point range in the daily. Now, does it mean it's overlapping? No, I have optimized the zone for you. So what the weekly did is, on a Sunday, it prepared you that this is important. And on a Monday, I've optimized it so that you get to execute within a 5-point range as opposed to within a 10-point range. Are we clear here? All right. Okay. So that's your weekly plan. When they overlap with the daily, what they mean and how you want to keep both the daily and weekly open at all times. Because the weekly will tell you the next 100-point move. The daily will probably talk about the next 20-point move. So that's the big difference. And you must know that. And I always say the weekly, irrespective whether you're a scalp trader or a swing trader, the weekly prepares you. You know the important zones, areas that will come into play the next week. So when they do come into play with the added MGI context that I share, you are ready to engage. Whereas if you're a swing trader, or if you guys look into options, weeklies, or so on and so forth, then the weekly is good, because the moment we are finding acceptance at the upside pivot or downside pivot, or whatever that may be, or at major weekly resistance or major weekly support, then you already know that we are looking at a swing trade. I'm not the one to share weekly resistance and support 30 points apart. So keep that point in mind as you guys go through weekly and daily. Now, how to manage the overlapping zones, I've spoken about it. And lastly, session prep. First thing to look every morning, guys. Prep is everything. When you come online, let's say markets open 9:30 Eastern time. At 8:45 latest, For those 20 minutes, there's no trade pressure. You are not thinking about your performance. You're not emotionally drained. You're mentally fresh. At that point, those 15, 20 minutes, just go through where those London highs and lows are. Where was the previous day's value? Did the value migrate or did the value overlap? What did Asia do? Do we have a higher low, lower high, or any sort of pattern over there? What am I saying through my context? And if you guys observe very closely, I look at the same things every single session. You will never see me looking at something new or introducing anything new to you guys. It's always the same old references. So look at those, understands what's happening, read my context, not once, but twice, because trust me, of the first read, you will often miss things, but not when you read it twice. Okay, so that is how you want to prepare every morning. And of course, before the market opens, usually I try to post the plans by like 45 minutes to 60 minutes ahead of the open. So that gives you plenty of time to review. At the same time, upon review, if you have any questions, you want to use the chat room to ask me, because that is your window. That is your opportunity to truly prepare. Okay, RS, you've said gap rules, but how am I supposed to navigate? Are we opening into support? Are we opening into resistance? Do you have any bias, any magnets we are looking for? Do you think the odds of inventory correction is present or not? All these questions, guys, you have to come up with them. You have to ask me those questions, because that's the only way I will know what is going on in your mind. Otherwise, there's absolutely no point where I'm just sharing my commentary, my trades, how I took, why I took, how it worked, etc. But that doesn't have that value unless you are able to eventually think in the same direction. And the only way you get there is by asking me questions, is by being online a little earlier than before, a little ahead of the open, so that you can ask me the right questions, you can learn, and you can be truly prepared. Any questions?
No.
Okay, I'm moving on to the next slide. All right, next. Zones versus real-time area of interest. Now, zones, I've already explained, those are the edges, you need to have them. Now, how to trade the zone reclaim? Sometimes what happens, we tend to have a zone which looks below and eventually reclaims. So let me show you a very, very quick example here. Is this upside unlocks the gray zone right here. So if I was to apply the list framework at this point, the list framework actually failed over here. We had a clear breakout confirmation, retest, and this is the candle where you were looking to take position within this gray zone. And you would realize that if you took at the midpoint of the gray zone, let's say at 70, you would have already lost your points. Now, this was a clear look below of the zone, and reclaim happened right here. Now, just be with me here. Why was this reclaim a trade to be taken, even though you lost 7 points? Answer is straightforward. 1. Observe the pattern that is forming since morning, right? We had the Asia low. We had a higher low in form of RT8 session. London session is also a higher low. So we clearly have a pattern developing here. 1. 2. Look where the London closes. So London closes, you look at the 16:15 candle, which is London time, and the London close sits at 68.63. So what will you do at the time when London closes? You draw a line at 68.63 and label it on your charts, whether I do it or not, but you label it on your chart as London low. Now, there are two things you got to be aware. First, we looked above, flushed, your first trade failed. We had a list confirmation. I'm not taking that away. This failed. So the short worked perfectly. So that's part one. Part two, the long failed. But look what happened. In that failure, all we did is held the London and Asia high. That's the first bullish sign or confirmation you've got. And that is when we label, oh, was it a look below and fail? That's when you start thinking in your mind that was it a look below and fail? And why are we thinking that? Because we had the Asia London high defended. And whenever that happens around the key levels, you want to prepare for a potential break, and vice versa if the inverse was to happen at London Asia low instead. So now look at this, what happens. We first defend the London high, and thereafter we defend the London close as well. What happened? And then look what happens. We defend the London close. And that is when you're thinking, you know what? The second we reclaim this gray zone again, I want to go long. And what is a reclaim? Very simple. You want to again keep thinking in the terms of a list framework, but you cannot wait for 4 steps, because remember, it was a look below and fail, which means they just trapped buyers and then sort of came back up. So now again, right here, you see they go back up, and now you've got a full body candle back test. If you even go on 5 minutes, 10 minutes, it starts becoming more clearer. You have another breakout back test that holds. How do we know this back test held? Forget the color of the candle. We are watching at the wick and body. The body has developed completely above the gray zone and wick only below. Add to that we kept defending, forming higher lows. Ultimately, the next candle became your opportunity after the breakout was confirmed. Now remember, this was the second breakout attempt. It wasn't the first, so which means this entire action is holding merit. And there you go. The next candle is where you take your longs and put the stop loss either 7 points or the nearest low that you find. Ultimately, you will realize we continued grinding higher. Now, before I move forward, I need to hear if you guys have any questions on how to spot this entire development plus the look below and fail, because I have covered a lot of aspects around this, and these were the questions I got on email. Any questions? Anyone, guys?
No, thank you.
Okay, so does it make sense to everyone on observing these patterns that I spoke about, higher lows, how it moved from Asia to London to RTH, and then post that, how we defended Asia and London high, how the London close was even higher low, and ultimately a move higher where we in between experienced a less trap in the process. So this is a very good trade example of how it took our stops, but we had an opportunity to go back in. So that's your real-time area of interest when I talk about, because these are references such as IB high, London close, London range, edges, etc., which you then need to follow in order to trade what we say the zone reclaim. And this also brings me to the point of how important contextual awareness is. So at this point, just ask yourself, right? At the open, right at the open on Thursday, ES had tempo. ES rejected from the top of this mini balance that I formed. All of this was present for it to go and test the Asia low. But ask yourself, this did not happen. So what did not happen is also a clue versus what happened. So not only did we not go down here, but if you look over at NQ, it went to its blue zone. But look what it did there. It did not clean up the Asia low again. So although NQ traded into its support and very much held the support, it did not clean up its Asia low, and so did ES did not manage to find that deeper pullback like NQ, but still did not clean up its Asia low. That itself is giving you clues on how the structure is developing for the session. So you may not have caught the bottom here, but if you did not catch this region here, then that's when you want to ask yourself, what was the hesitancy? What did I miss? Did I think in the way that I am now narrating so that you could have secured this trade right here? Always remember, when markets are trending, breaking out, often you have three layers of opportunity. This was the first. This was the second. Obviously, I did not update the plan on Thursday, so we had no zones. We were stuck with the weekly, which did not trigger any list long or short. But if not here, not here, but here we had every reason, because we had the real-time area of interest in form of London and Asia high. We had London close, and then we had the gray zone, all three stacking up right here to target, let's say, 68.94 and 69.04 at minimum. Okay, now next piece, how do you manage high tempo moves? Firstly, does everyone here understand what tempo is?
Yes.
All right. So if anyone doesn't understand, please ask now, or else I'll move forward. Okay, so tempo is the speed at which the move occurs. It's like how quickly and how we are getting into the zone. Now, this is something where explaining you verbally is always going to be difficult. It is something that when you're watching the price action live is when you feel it. For example, had you been watching this candle drop on Thursday live, or you can replay, there's a replay option here in TradingView. Whenever you see these large candles, but the move of these candles is quite sharp, there's no pullback of any sort that occurs on a shorter time frame. And when you see such sharp moves, this is a high tempo move. And whenever the move is high tempo, you often go back to applying the list framework, because what the list framework does is it lets the tempo settle. It gives you a confirmation only for you to then engage. Now, catching this high tempo move down would be like catching a knife, which means there was no way you could have caught this unless you were watching 68, 36, 38 to go long. So if that was not the case, then it would be tough to catch this unless we got then a list framework, which also did not happen. So keep in mind, tempo is the speed of the move. The minimum, the pullback on shorter time frame, the stronger the tempo. This is just the best verbal explanation I can share. Ultimately, you need to watch the action live to feel the tempo. I often relate it to your emotions. You know, if you were watching a candle drop or pop at the speed it was, your emotions are often running high, where you're thinking 10 times, shit, should I take a trade? Should I not take a trade? This is too fast. This is too fast. That's tempo. If it is too slow, you're already more settled. So how you feel when the move is happening often is a direct translation to what the tempo is looking like. So whenever you have high tempo moves, like I said, list framework is your best bet. With that, next slide. Now, execution confidence. Again, at the time of executing, a lot of traders, again, I got a lot of emails saying that we don't know, how do we engage? We are struggling. We know the zone is there, but we are still struggling. Very simple. Your struggles are not because you don't know where to engage. Your struggles stem from, why should I engage here? because price is dropping into the zone, which is support, or price is rising into the zone, which is resistance. So that confidence, that gap is what I call awareness. And that awareness will only come when you ask me questions and when you keep studying the plans that I keep sharing every single day. Because that gap is confidence. And most don't understand why I picked a zone. Most do not happen to read the plans with as much depth as they should be, because it's often like, okay, let me skim through. Oh, okay. So if what RS said, 69, just a So RS said 69.47 is the pivot. Okay. If above, long, 69.57. If below, short, 69.37. Incorrect. That is not how you look at it. I've explicitly explained value is developing at X. That is what it translates into. The moment we are above, we'll be above the pivot during IB period, during period B, post London close. I'm attaching conditions to every move that I talk about. And when I post those conditions, they become extremely important, because as those conditions fulfill, you by default will be like, okay, he set forth 2 or 3 conditions. We've met the 3. We are moving in the right direction. Now you have the confidence to pull the trigger. But if you've skimmed through the plan without reading those conditions, there you go. That is where that gap of confidence remains. Now, are we good here?
Yes.
All right. Next, common problem, zone worked, I missed it. What's next? Always wait for a reference level. What's a reference level? Simple. Asia, London high low, London close, IB period, the standard value areas that I am watching. Not see, every session's value area isn't important. They are important when the value areas become important when that particular session results in a structural change. When that happens, that is when the edges of value become important. But let's say if you're chopping around the same range like we were doing between 68 20s all the way to 68 60s 70s, those 50 points, if you will go back to those plans, yes, I shared with you the value areas every single day because you should know them. But you would have never seen me convert any of those value areas into an important zone until on Wednesday, because that is when I identified which session's value is now important to guide us. Otherwise, if you were to just randomly follow value of every single session, it's not going to add value to your trading or assessment. So again, comes back to the plan. The plan will give you the next best reference level to engage. You will not see my plans coming with Asia or London ranges every single day. I will decide which one is important, why is it important, and then I go ahead and share. For example, if you guys recall, this temporary balance did not exist until on the day of FOMC. Before that, all we were doing is following this mini balance, which is likely to come back into play. I just don't know if it's next week or not. I'll see to it. But look at this temporary balance. Ultimately, the bottom edge guided you with a good long. And ultimately, if you recognized this action right here, it guided you with the breakout as well. So when I make changes to those balances, you want to pay attention to them because those are references which become important for you to engage outside of the zones that I shared. Okay, so that's how You wait, look for area of interest, and then you look to join. Keynote, this needs experience. Why do I say this needs experience? Because all I did right now, just a few minutes back, I explained you what happened right here. And this is a pattern which is very common, by the way. So if you learn this pattern, how I identified, and you keep them in your journals, I am pretty sure the next breakdown or breakout of the balance may have a repeat of this pattern. And whether the price is then at 5,800 or 7,800, it will not matter, because remember, it is the pattern that worked, which is using the same references that we keep talking about. Any questions here so far? Okay, so I'll move on to the next bit. Reassess market conditions every 30 to 60 minutes. Absolutely important that when you are trading, whether you're in the trade or not in the trade, every 30 to 60 minutes, ideally 60, you want to just take a step back and be like, okay, so what has happened in these 60 minutes? What does it mean in respect to the plan posted? What does it mean in respect to the prior session? What is the essence of these 60 minutes? Are these 60 minutes giving me clues like migrating period A, period B, higher, lower? Has the IB period performed, has the IB period to the prior session migrated higher, migrated lower? All those factors you will have to observe for when you are reassessing. In fact, what I would recommend is you guys collectively could work on another format on the factors or elements to look at when you're reassessing market conditions. Now, this is what I do, but I only do them when there is significant amount of chop, which was the case when we were chopping around 68, 30s, and 50s, is when I took a step back. I recall it was a Monday. I took a step back, redefined everything, came back, and I said, this is the level we want to engage at. And ultimately, that worked. So it's very important to take a step back, reassess, and to remind yourself of what the structure is so that even your bias doesn't come your way. So reassessment is very, very important. So when you start doing point A, B, C, so far as covered, you will realize that gap called confidence between your execution and knowing the plan will be filled, and you will be in a much better position to press that button. Okay, next, last point on the execution, navigate weak or choppy response at the zone. I always tell you guys, it can take time for the zone to work. There's absolutely no rush there's absolutely no rush for a quick response. Markets can take their own sweet time, but your risk is defined. There's no structural change which you would have identified with the reassessment. If there's no structural change, there's absolutely no reason to panic. Let the zone play out. If there is any structural shift, any contextual update you are watching, you will know. For example, period A, period B migrating lower, period C migrating lower. It's one time framing down, one time framing up. There will be a lot of these clues that we keep talking about visible to us. London ranges, how they've developed. So when those zones hit, at that time, you already know that, okay, A, it's a slow choppy day. Probably the session is such, right? Because we are maybe waiting for FOMC, which means if you're waiting for FOMC, there's absolutely no reason for markets to move real quick. That translates to you having to wait until the zone responds. So understand the character of the market on the day. So if you will recall, in the weekly plan 2 weeks ago, I explicitly mentioned it will be a two-sided activity for the next 10 days. And that's precisely how it happened. Every higher high resulted in a sharp pullback. Every low was bought up, resulting in a higher low during RTH. So what we know, it is chopping, it is wait mode, it is still waiting for FOMC. And until that happens, all we can do is back the zone that we have and define our risk. it's unlikely that we're going to break out of that chop until and unless an event occurs, and is what we saw over the last 10, 12 sessions. Any questions here before I move on to the next slide? All right, okay. Now, execution strategy, checklist. This is what you need. I have it here for you. Conditions, tempo, event, one-time framing, up or down, exhaustion. You guys have my exhaustion ranges. Calculate. Session opens, calculate. Be ready with these. IB range, do the 100% extension, especially when the ranges are wide, not when it's a narrow 20-point IB range, but more like, 30, 40. It becomes more and more valuable. How is value performing? London range, London close, time frames, look across 15, 30, and 60. Do you need to look at all three time frames every day? No. But when the session is choppy, when it is slow, sometimes a lot of traps like look below, look above, and fail happen on 15 minutes. But the moment you take it to 30 or 60, things become more clearer that all what was happening on shorter time frame were traps, but 60 continues to hold and is finding acceptance or rejection. Again, patterns to observe. I was asked, how do we know that a higher low or a lower high, so on and so forth, is important or developing? Very simple. Observe against which references these are developing. Is it against London? Is it against Asia? Is it RTH? Is it IB? Is it value? When you start looking at how this pattern is forming at, and if they are forming at key zones, then you know that this is an important pattern to observe and one that will help you execute your trade or support the direction of the trade you've taken. Trap considerations, look below and fail, look above and fail. Again, observe where the look below and look above and fails occur. For example, look at this. Look where the look below and fail occurred, right at the London high. Look where the next one occurred, right at London close. So what we know is that whatever trap occurred at key references, which means if you observe that the gray zone failed, at that point you must be like, wait, this is a trap. How do we know? Because they bounced off just below the London high, just above the London high, and at London close. So these are important references we look at on a daily basis. And if that is where the trap has occurred, which means that zone on reclaim becomes a strong trade. Make sense?
Yes.
Okay. Okay. Similarly, how to tackle traps, which I've already covered. You want to look for large wicks. Again, just look at this wick right here. Just look at this. It's a pretty decent large wick of 15 points. So this wick has held, and you will see all the actions subsequently were within this large wick. So you want to keep an eye on such patterns because they really help you understand what the auction is suggesting. And also, please remember, we are attempting to break a balance. We were at the bottom, we are attempting to break a balance, and we've tried to attempt one too many times before. If you look left, which means first attempt, second attempt, this is a third attempt, and this third attempt is happening on the back of FOMC, which means there is an event catalyst pushing this break. And this is what you want to keep in mind. Again, indecision at pivots already covered. They are rare, but they happen when markets are in wait mode, like it happened last week when the weekly pivot kept chopping right here. And why it was chopping right here? Because we were in wait mode, waiting for the FOMC. And that's all what execution strategy and checklist is about. Execution triggers, standard, observe on 5 to 10 minutes. Basic, what are you observing? You're observing for a response. How is a response gauged? The response is gauged by the size of the wick that we see. A backtest is often the best entry. Unless you are confident of the context and structure that is at play, then you are already taking it on first test. Why are we taking it on first test? Because we already know the confluence that is present at the zones, is why we've more often than not seen markets turn right at our zones. Then you've got the list framework on 15 minutes. Sometimes when it gets choppy, I tend to look on 30 minutes as to what is happening. Then we've got intermarket confluence. Check what NASDAQ, Russell are up to. It's very important because if you see right here, I spoke about this example, the Asia low support and ES, and look what NQ did on that day. But you know what's interesting is just look what DAX did. This is Thursday at 3 o'clock. Thursday. Now look, at Thursday at 3 o'clock, what was DAX doing on Thursday at 3 o'clock? It was breaking back into the prior 5-day balance. Now, as US traders, you all don't need to look at DAX, but all I'm trying to show you is Russell had a similar pattern developing on Thursday where it was breaking out. So the two indices that were breaking out were DAX and Russell, and look what happened. We had this clear confirmation. Now, of course, I was busy on a Thursday, but I would have loved to have highlighted that live, that guys, DAX is showing strength. And I've spoken about this before, how when DAX is showing strength, ES will eventually mirror that move. Look what happened. Ultimately, ES followed DAX once London close came through. So I cannot emphasize enough on the edge that intermarket confluence truly provides us. So keep an eye always on ES, NQ. If you can on DAX, well and good. If you can't, no problem, because NQ was at its support around the same time. And look how NQ reclaimed its prior inside day high, inside day low without much trouble. So keep an eye on these intermarket confluences because they really tell you that, okay, two different plans, two different zones, but look at the structure, look at the breakout that's happening, which means there will be a catch-up trade at play, especially when these indices are at important edges. In the case of ES, it was trying to break out of its temporary mini balance, NQ at support, so on, so forth. And you've got all the confluences you need. Now, some traders here, they use order flow tools, footprint charts. You guys can use it, absolutely no problem. But the only thing is you want to not solely wait for these order flow tools to trigger a signal, because there have been occasions, and I've backtested this, that sometimes you will get a signal, but probably or confirmation, which will be 10 points or 5 points late. I'm not saying that's incorrect, but we've observed these nuances. So if at all you're using them, so just be aware of them, and you can of course use them to pull your trades. Now, list framework. Sorry, any questions before I move on to the next one? All right, I'll assume no. Okay, so next one, just a second. List framework. So list framework, again, I've explained, many examples are there on Discord. Even if you watch my YouTube videos, I've covered list framework in depth, and probably in the next 2 to 3 weeks, I'm going to come up with a dedicated list framework video. But very simple, how to apply them at the zones, top or bottom. Now, often what happens is traders are thinking, okay, so how do we apply the list framework? Is it at 68.68 or is it at 68.72? Now, the whole point of giving you a zone is so that you are watching for a development within the zone, not at a single level. Because if I choose a single level, sometimes you are likely to miss that. So what I always recommend is the zone is given for your awareness, but along with the zone, I have put in a key level that you need to watch. For example, in this gray zone, what is a key level between 68 and 72? Can someone tell me?
$72.
Very good, 72. Why? Because that's the mini balance, sorry, the temporary balance top. So 72 is the level that you got to watch. As simple as that. But I want you to be aware that 68 could pull back a little harder, could get to 68, or maybe the wicks are not touching 72. They may be just at 68, 69. So still the trade is very much valid. But always any zone will come up with a key level. Similarly, 68.20 to the downside will remain key. So always just remember, zone is as a guidance when you have to apply list framework. There will always be a key level that you can observe while applying the framework. Define acceptance and rejection. A reminder, I've said this many times before. Anytime I mention, guys, look for acceptance, look for rejection, all I'm talking about is apply the list framework. I'm not vague about my acceptance or rejection. It's very clear. I will never tell you, oh, guys, there you go, 5 minutes acceptance. This was a long, you should have taken it. Never. I'll always tell you there was a clean list long here, and that is called acceptance. There's a clean list short here, that is called rejection. Even the upside and downside pivots that you watch, track on weekly, every weekly review, I will tell you there was a list framework right there for you to engage, because that is the only true way that you know acceptance and rejection. Any questions here so far on the list? I just need to know that. I'll assume no. Okay. So how do we know if chop is acceptance or rejection? I think that was the most recent question I had, given how 6840s was chopping. Honestly, chop is neither acceptance or rejection. Chop is indecision, and that's something you want to remember. Although what that chop means is either markets are in wait mode or are going to make a move soon. Now, how do we know which direction is the move? We go back to our assessment that we will be doing every 60 minutes to know what the context is developing like, what the structure is telling us. So any chop that will be there, and I'll just quickly show you an example. Any chop that you see, and let me take you to the same example of 40s, just a second. There you go. Any chop that happens back and forth, back and forth, back and forth, there will always be clues within these chop. The only thing is, are you ready to watch for those clues? So just let me delete this yellow zone so that it's clear to you guys. Now look at this, the bottom of the balance. We had a clear breakout confirmation, retest, multiple full body candles holding, and there you go. This was the final opportunity you got. And through this entire chop of so-called, we did not see a drawdown of more than 5 points. Now I'll bring back the yellow zone and see how the session on Wednesday backtested the yellow zone and not the bottom. So now you see why I have this zone as opposed to just leaving you with a single level, so that you are aware that at any point in time, you could be watching for price to test, not the exact point, but somewhere within the zone for the ultimate entry that we're looking for, and something that happened right on Wednesday. Similarly, if we go back again, let's see. There you go. Again, this one right here on Tuesday, this was morning, not RTH. I'm just looking for something RTH. There you go. When you have something like this, very obvious, a lot of questions on this, that if you have a price action of this sort, even though this was Asia, and I wouldn't recommend anyone to trade during Asia when there's no liquidity. But again, look at this chop. If it happens during RTH, same chop, 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 but holding the bottom, you are long here. Honestly, there's no other way to look at this apart from bringing in context, put your 7 points and you're done. But look what happens thereafter. We have a clear flush that happens, and this is led by DAX. We backtest, rejection. Again, these rejections don't hold. So just think about it. You followed the list framework twice. Again, let me remind you, I'm not asking you to implement the list framework during Asia or London, but what I'm just telling you is to look at the pattern, because they may occur during RTH. And if they do, you must be prepared. Now look what happens here. This would have essentially failed unless you took 7 points. This would have also failed. right? But what would have worked is the breakout from here. Now, this is where you could have made your first good opportunity of 27 points. So sometimes lists can chop, lists can give you false signals. Not every time, sometimes, but when it does, being aware of the session you are trading in, whether it's Asia, London, or RTH, being aware of the context and structural development will allow you to take that trade or not. It was very recently in Discord, someone told me this is a list short, and I said, wait, this is not a list short yet because we have a magnet right above. Let that clean up, and then we will think about a list short. So sometimes you have to be aware of the structure, like I said, to know if that list short, even though it prints, is warranted or not. Again, you can see we came back, again kept holding, and had a decent 19-point long from the top of the zone. Same story, we had a look below right here in pre-market, but look what happens as soon as US opens. We have another list framework long right here, and again from the top of the zone, if I take you into the gray zone, 50-point trade. So often list framework at the pivots that I mentioned on net basis will be profitable. That I can pretty much say with confidence. But until we hit that sweet spot, especially during chop sessions, and those sessions are usually wait mode, so that is where your awareness is important. Like this entire chop that we've seen that has happened was all due to FOMC, so that's the awareness, and that means that you don't need to press every single time, but rather wait for more confirmation before executing your trade again. So we know that right at the open there was a small look below. Now remember, this wasn't a complete failure. Why? Because majority of the body remains inside the balance. It was largely the wick that was below. So this is where likely you lost your stop loss. If I was to take it from the bottom of the zone, yeah, this is likely where your stop loss was taken, but this is not where the setup failed. And this brings me to reminds me of the point I spoke earlier in the conversation, where I clearly said that we are looking for the setup to fail, not necessarily your stop being taken. So right here, your stop was taken, done. But because you're sized right, now look what RTH gives you, a textbook list long right at the zone. And there you go, your trade triggers all the way for new highs or a good 40, 50 points. So even lists, you were to blindly follow, you would make money, but that means you're blindly following every setup that triggers. If you put in a little bit of effort, bring in a little bit of situational awareness, market awareness, structure, context, then you may not have to take every list trade, but you can take the 1 or 2 list trades which truly need to be taken. Let's say the one during RTH. There's no point in engaging something during London as much. Worst case, nothing at all in Asia. Are we good here? Any questions? All right, so I'll assume no questions. We are done with lists. Now I've spoken about importance of reference. I've already covered this. The slide has now come through. We've got Asia, London range, same thing. How do we know a back test is due? We know a choppy session, and I just spoke about it recently on Discord, that both ends do get tested, because that's what markets do when they are in wait mode. They're likely to bounce off at both ends. How to use these references to our advantage, I already explained it to you when we covered the real-time area of interest with examples. So when you're watching the recording, you can always go through them. Okay, under what conditions are these important? Again, it's been covered. When they turn important is when I put them on the chart, and we are always watching if these ranges are migrating higher or lower. If they keep overlapping, they are not important. If these levels do not align or closely align to any of the key levels I have mentioned on the chart, then again, they are not important. So again, I'm very selective on when these are used, and all those selections I have shared with you already. But even if after watching the recording you have any questions, you can circle back. Intermarket confluence, again, we covered. However, I had a question on why do I look at DAX, why not any other markets? I look at DAX because I trade DAX, as simple as that. I can look at FTSE, I trade FTSE as well, but not as often. But I could look at FTSE and also find confluence with ES and NQ. So it's just that because I share DAX plans, I trade DAX every morning, DAX becomes an easier index to look at when it is across the border. Next is NQES divergence, event, non-event. Now, this is something in particular I wanted to share with you guys. If you recall, it was the session of, just a second. Right. So it was the session on Monday when NQ opened on a value gap up, but ES did not. And what we know, ahead of events, value gaps tend to get filled. And look where NQ opened up, right at its then opening pivot. So on Monday, if you look at the Monday charts, it was the opening pivot. And ES, although missed to trigger its opening pivot by a few points, NQ did not. In fact, it did trigger, had the value gap open. Now that is divergence. Look at ES. ES flushes right off the gates. There's no value gap, but NQ is right opposite. There's a value gap, and it actually popped in a little first to trigger the opening pivot, only to then close. That is why on Monday, even though I missed the ES short, I switched immediately to NQ and took that because of the divergence that was present, which meant that although ES could continue flushing, I was like guaranteed 100 odd points sitting with NQ because that value gap will fill even if ES doesn't flush off with an equal magnitude. So again, these divergences are our edges. They don't occur every time, but when they do, they are the highest probability trades you can ask for. So since we are on the topic of high probability trades, guys, create a checklist. Like I said, there are 200 trading sessions. Know what kind of trades are you going to take every single day. What is the bread and butter setup? Like these divergences, for example, if you have 200 trading sessions in a year, these divergences on NQES occur probably, I would say, 5 to 10 times a year. So you've already sorted yourself with 5 to 10 high probability trades, and so on. You need to create a book of trades, where playbook of trades, where you know what occurs often, what is the bread and butter, the edges of balance. Just look how clean this has been, right? I don't need to say much, but just look at this. Rejection, 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 right here, pretty high, close, got pretty close, rejected, and then look at the bottom one. Again, rejected, got pretty close. Same story, found acceptance, held multiple times. But look at this rejection. 1, 2, 3, 4. What does this tell you? That these are high probability edges. Now, whether you trade ES or NQ, you will find similar performances. So while with NQ, you kept hitting these edges, with ES, you were hitting the zones each time. For example, we again in NQ hit this 820, 830, 850. Look where ES hit, right at minor resistance. So while this may not be at its balance edge, it got to its resistance. So this is the sort of confluence we look for, trade opportunities, high probability trades that you can trade. And each time if you took these, you would have made 50. Now the question comes is, okay, RS, what if we took these 3-4 times and that one time it fails? You made money 4 times. If the 5th time it fails, it's okay. You still have a good 70-80% success rate on the zone itself. So if that zone is already giving you that sort of success rate, why question it? All right, so that is your edges of balance and how to capture these opportunities I've already spoken about. And so that is intermarket confluence. Questions? Okay, I'll move on to the next one and should be the final one, market waves. So a lot of traders tend to get confused, and I did get plenty of questions on these inventory correction versus trend. Now, this is your immediate thing you look at every morning. If it's a value gap up, true gap down, single prints, you look for a back test initially. So often what happens, traders are confused. RS, you just called a short. We filled the gap. Now you're talking about longs. Very straightforward. Markets don't move in a straight line. It's all about waves, right? So the wave one is inventory correction. So that's your first move. Does that inventory correction mean anything? No. All it is an inventory correction. Is that the real move? No. When does the real move occur? After the inventory correction is done. That is when the trend appears, whether that is finding acceptance at prior sessions value area edges or prior sessions session high and low is from where the trend eventually emerges. Same story, rotation versus trend. So think about it. Last week or last 10 days, we were rotational, where at 68.20s all the way to 68.70s. But give yourself a break. Take a step back and think, within this rotation, what is the higher time frame analysis suggesting? This is a trending market. Why trending? Because we've been constantly observing for value migrating higher, forming higher lows ever since 65.50s printed, ever since that support found bid. So what we know is that this rotation is happening on a smaller time frame, but value continues to migrate and the trend is intact, which means on intraday basis, while you continue to play the two-sided rotations, the trend up is your primary trade, which means any key support that triggers, you are looking to stay long versus look for a primary swing short. So being aware of where we are within a certain time frame and why we are rotating is extremely important. So a lot of traders would have gotten probably bearish when the rotation was happening the last 10 days. No, that was not bearish. It cannot be, because value kept migrating higher. That was the key point, and we kept printing RTH session, higher lows, and we were waiting. Why this rotation was happening? Because we were waiting for the FOMC. So you see, character, why, how, these are questions you need to answer. And as you answer these questions, by default, your execution becomes sharper, you're much more prepared, and you're much more confident. Same story, V-shaped recovery versus trend. So initially, if you recall, okay, ES. Now, if you look back, what have we seen ever since we found the highs at 69.54? ES dumped all the way to 65.50s, and thereafter the recovery began. Thereafter the recovery began, and this was a V-shaped recovery. So far, a V-shaped recovery. So is this a trend, guys? No, this is still a V-shaped recovery. We are literally retracing everything that we lost since October. So while everyone will say this is trend, no, this is not trend. Are we at a stage where buyers maintain control? Yes. On a higher time frame, that is the case. Why do I say that? Very simple. If you look at the weekly plan, it's divided into three balances. The first one goes from 69.50s to 68.40s. The next one is from 69.97 all the way to 65.80s. And the third one is from 65.20s all the way to 62.30s. So if you look at markets zoomed out on a higher time frame, so these are your three distributions or three balance ranges, and each of these come with a label. The top one, buyers in control. The middle one, rotation. The bottom one, sellers are taking control. And that is how you divide this on a higher time frame. So at this moment, we seem to be rotating between the top two balances rather than trending. Trending would be when we would break this upside pivot and continue moving higher. Now, nuance, while we will be breaking this upside pivot, if at all it happens, let's go with this flow. If at all that happens and we break, the instant question comes is, okay, so while this can break and we can find 100% extension of this upper distribution, will this then trigger something called exhaustion? Exhaustions that occur on smaller time frame and higher time frame. Now, when do exhaustions occur? You bring in our usual 108 to 117 points and so on and so forth, like I have taught you guys. So once you bring in these exhaustions, there you go. You are ready to understand what is inventory correction versus trend, rotation versus trend, V-shaped recovery versus trend, and exhaustion versus trend. Exhaustion is merely a reset, not a change of trend. Everyone is clear with this point? Guys, some confirmation would be good. Okay,
Yes.
thanks. Thank you. Okay, so these are the waves that you need to understand, and once you understand them, you will realize, and of course, the way I narrate it is because I've had the experience of trading these. You've seen me trade these live. You've heard this clarity from me in Discord. So it is not something that I'm sharing now, but it is something I've been sharing always. But what this does is, as you keep listening to this, as I keep reiterating, these concepts are reinforced. And as they're reinforced and you're trading, you will realize that you are able to click better because you understand what is happening. We exhausted to the downside at 65.50s. That was exhaustion. Then what appeared after exhaustion is a V-shaped recovery. What are we seeing now? V-shaped recovery, not a trend. All we know within this V-shaped recovery, buyers are in control or not. That is all what we are observing. Trend truly appears now above the upside pivot. This is why I have labeled that zone as upside pivot. I could have called any other zone upside pivot, but no, in true essence, upside is only above 69.50s. And as we get above there, I can tell you from now, exhaustion will start to trigger. Of course, as we get closer to time, I will be talking about that. So please review this. It's very important and it will set you up for 26. As I've reminded in Discord, 26 first half, I'm expecting it to be as volatile as November was. And if I am right, then everything I'm teaching you will be 10x useful. And if I'm wrong, it will still be 10x useful because you're going to see these elements come into play throughout the next year any which ways. Now, how do you join trends? Very simple. You've got the pivots I spoke about. I spoke about balance ranges. When they break out, you can join them like we saw with the temporary. Just a second. Right, as we just saw with ES, each time balance broke out, we had good back tests happening, allowing you to join. Similarly, with the most recent one at the temporary balance, where we had a good looking confirmation for a move higher. So this is how you join trends. Next, how do you assess if the trend or move is capped? Very simple. Are we leaving behind single prints? Single prints is very important because if we leave them behind on an intraday basis, it confirms trend to us. And Is the move capped? The question comes by, have we tested the magnets to the downside or upside already? If we haven't tested those magnets in a trend session, most likely we are going down to those magnets. Now, is everyone here familiar with single prints, or do you want an example?
Let's go, everyone. Be great.
All right. Okay. So I'm going to keep it very simple. So on a 30-minute chart, just a second, let me spot one for you. All right. So on a 30-minute chart, you only spot single prints on a 30-minute chart. It is where there is no activity on either side of the candle. And that is RTH session. So right here, as you can see on my screen, I've drawn a black rectangle box. And you will see that the RTH low is at 68.88. That's the high of the single print, and the low is the prior RTH swing high, which is at 68.75. So from 75 to 88, we've got single prints, which means this is a magnet. At some point, markets will look to fill this up, and this is only filled during RTH, not Asia, not London, which means, let's say, if my resistance, which triggered on Wednesday, by the way, at 69.04, then you take a short. Why? Because now you also have got a magnet down there, which is visible to you, single prints. Similarly, had you wanted to join this trend up, would I recommend you join on the break of 68.88? The answer is no. There's no point joining this break. Why? Because you would be going long into the so-called resistance, and that is never a prudent trade to take. So in this event, or in this particular case, you were better off to wait for resistance to trigger, take the short for a cleanup of the single prints, and there you go. You would have had a very good success rate because the flush happened overnight. Similarly, if you're going long at Asia, think about it. You're going long at Asia. What is my magnet? Same magnet, the single prints. Because this is not an RTH flush, which means they're not filled yet. And we are at support or bottom of balance, which means any long makes sense, at least up until these single prints. Am I clear?
Yes.
All right, thank you. Okay, so this is how you assess trend: formation of single prints, one-time framing up or down, breakout of balance or breakdown of balance, and where are the magnets. You also measure trends by exhaustion. Example, has 100% IB extension already occurred? If so, has it aligned with our usual extensions to measure exhaustion around 108 and 117 points? When everything comes together, you know that this move is likely capped. But when these exhaustions and extensions are not triggering and magnets are still higher up, and we've still got trend early, we are pretty early in the trend, early in the day, single prints are there, then you are likely to join the break when it comes. And similarly, clues to observe for trend, same story. When you go back on execution triggers on London session, Asia session, you bring all those clues, London close, back into the tape, back into the picture, and there you go. You are ready to join the trend higher. Now, with this, the session ends. I have covered about 80% of all questions, all subjects that were there. Now, what I have not covered explicitly is how to trade the gap rules at the open. That was the most pressing question I had, and that is something I'm going to leave for the later pre-recorded video that I will be sharing, because I'll walk you through multiple gap examples, and that will be a topic on its own. But apart from that, I have covered everything to do with zones, confidence, market waves. I've covered balance for you. I've covered intermarket confluence, references to look for, Bliss framework, triggers, strategy, checklist, confidence, zones, real-time areas of interest, the importance of weekly plan, how it works in conjunction with the daily plans, the essence of zones and why they are important and why they are 50, 60, 80 points apart. Again, what sort of mindset you must have when you're trading, whether you're full-time, part-time, hustling, how to manage your emotions, your trading goals, your position size, your style, aligning expectations to reality, what's my approach, things I went through, how I have developed as a trader, what's my mindset. So I have given you a good brief over the last 3 hours or so. So any questions that you guys have now? No questions? Okay, so with that, I will end the Zoom session and I will hope for the 30, 40, and 50 people who joined to share their feedback, how it helped you, did not help you. If you have any questions, circle back, and anything and everything I spoke about supporting you in your journey to succeed as a trader, I mean every bit of it. Nothing is just to say for the sake of saying. So I mean it, and it is best that you guys circle back each time so that you are on your way to profitability, success, consistency. So I wish you all the very best. Have a good weekend, and I'll see you on Monday.
Thank you.